Well, welcome to another episode of Three Things in 3 Minutes. My name is Damon King. I'm a certified financial planner professional, a licensed investment advisor, and licensed insurance professional with Chapelwood Financial Services. I also serve as the lead instructor for the Rock Your Retirement Financial Enrichment Series at Francis Tuttle Technology Center. Well, it's April, or it's getting close to April, let's say. And that means one thing. Tax day is upon us. We've got about a month or so away from tax day. And I always think it's funny that we give tax day its own day. It's tax day. It's like we celebrate some kind of a holiday. But if you're like a lot of Americans, and myself included, the fact that you have to spend hours of time and a lot of brain cells trying to find every little deduction and credit you can get to save as much money on your taxes as possible is hardly worthy of a holiday. But it is what it is. Well, today, in honor of Tax Day, I'm going to focus on 3 deductions that are often overlooked on a majority of tax returns in the United States. Number 1 is reinvested dividends. Now, when you buy shares of a mutual fund, let's say, and you reinvest your dividends instead of taking them as income, what are you doing? You are increasing your basis in that mutual fund, the amount of money that you put in to buy shares of that fund. What that also does is it reduces the amount of capital gain that you might recognize whenever you sell shares of that mutual fund. You have more money invested. That closes the gap between what you put in versus what you get out. That difference is your capital gain, and that's what you owe taxes on. But a lot of people forget to factor in those reinvested dividends. So when they go to report their capital gains, they end up reporting what they actually put in initially. They don't count all those reinvested dividends. As a result, you end up reporting a lot more of a capital gain and pay a lot more in taxes than you really should. So make sure that you're catching those reinvested dividends. Number 2, depreciation or bonus depreciation on property that you use as part of your business. When you own a small business or even a large business and you buy property, equipment, things like laptops, copy machines, maybe vehicles, things of that nature, that you use as part of your business, the IRS lets you to take a deduction over time to recoup some of the cost of that property. We call it depreciation. But what if you want to take all of that depreciation in the year that you put that property into service instead of spreading it out over time? Well, the good news is you can. You can actually take bonus depreciation. You can depreciate all of that property in the first year that you use it to help you offset your taxes even more. In 2016 and in 2017, the bonus depreciation is limited to 50% of the value of the item, but it certainly helps. And in subsequent years, that bonus is going to go down to 40%. But for now, you can take a full deduction for the full depreciated amount of property that you put into service last year and this year. The third thing that we want to look at, the third deduction that's often overlooked, is a waiver of penalty for retired people. Now, when you're working and you're paying your taxes are paid through your paycheck, right? Your employer automatically withholds all of those for you. You don't have to pay them directly to the IRS. But when you stop working and you're retired, you are now responsible for paying estimated quarterly taxes directly to the IRS. They don't like to wait until the end of the year for you to pay all those taxes. They want to be paid quarterly. And if you don't pay your estimated taxes on time or you don't pay enough, the IRS will hit you with penalties and interest. But there is a way out of that. If you're at least 62 years old, you can request a waiver of penalty from the IRS, so long as you have a just cause for doing so. For example, let's say you just retired this year. You tell the IRS, you know what? I've been paying my taxes for the last 40 years through my paycheck. It never occurred to me that I had to now start paying quarterly estimated taxes myself. Would you please waive those penalties? I'll do better next time. Usually the IRS will grant that waiver. So keep that in mind if you're newly retired and you're having to deal with quarterly estimated tax payments and the penalties that might come along with those. We all have to pay taxes, but if you know the tax code, then you know how to work it and use it to your advantage so you can reduce your overall tax bill. That's all we have for this week. Thank you so much for watching. Give us a like, give us a share down at the bottom, leave us a comment in the comments section, and if there's a future topic that you would like us to cover in a future episode of 3 Things in 3 Minutes, let us know about that as well, and we'll do our best to feature it. Thanks so much for watching, and we'll see you next time.